Hi, it's Larry Gaines, Power Cycle Trading. Well, trading is really all about price direction and then controlling your risk. So risk management is key, and the best way to manage your risk for trading, in my opinion, is to use options. So first off, here's a Chipotle Mexican Grill. And now one thing, there's good short interest still in the stock, but it's had a great move to the upside. You can see here, it had this weekly volatility squeeze breakout, really triggered hard to the upside. And then when you look at the, pulling up the daily time frame, and we pull it up and look at Fibonacci levels, you can see that it's back now to the 618 retracement. So from this prior high back in March to the low it's made here, back above the 618. So if it can consolidate here on the 618 and hold, and it's trying to do that right now, then the next target will be back up to the prior high, which is 500, and then potentially back up to 537. So based on that, trading is all about, taking really good quantitative, very good quantitative statistical trades based on risk. And one trade setup that looks real good here is to do a trade on Chipotle with an upside target for $500. And one way to structure it for very, very low risk is to do what we call a butterfly or a put ratio butterfly. So by doing it with the put ratio, and we have a target of 500, it really has a great risk reward and a very low capital at risk, and I think that's key. So if it does fall apart, the way we set this trade up using options is going to have a downside risk of just maximum $80. So this is what it would look like. So we set this up for a price target to 500 right up here. Now if it was to go out at 500 next week, next Friday, this could make over $400 profit per spread. So this is a May 19 series, so we did a put ratio butterfly, the 502.5, 500, okay, then the 500, 497.5, $2.50 wide spread, 1 by 3 by 2, collected $1.70, so $170 per spread, max at risk 80. So if everything fell apart, the market cratered, maximum you could risk, put at risk is $80, potentially make over 400, and if it went screaming to the upside, you keep your credit of 170. So that's called a put ratio butterfly, and that's called managing your risk. So risk management using options. Hope that helps. Talk to you on my next video update.